Hello and welcome to this week's US Stock Market Report. I'm Gillham, Chief Analyst at Wealth Within. This week I'll be discussing Warren Buffett's approach to investing, and then I'll dive into the Dow Jones. Now before we jump into the report, I'd just like to mention if you have any thoughts on investing, please comment below and subscribe to our channel to keep up to date with our new content. So let's get into this week's report. Okay, let's get into number 5. Invest in companies and industries that you understand. Warren Buffett says that many people think quite a bit before making any investments. And sometimes they think too much. This is where paralysis of analysis can become an issue that impedes your success. Buffett cautions that you should never invest in a business that you do not fully understand. He says that before he invests in the stock of a company, he has to first understand how the company makes money and the main drivers that impact its industry. If he's not able to understand this in 10 minutes, he moves on to evaluate another company on this basis. Now you can't really fault that thinking, can you? Most people cannot predict the next fashion trend among teenagers or whether or not a medicine will be successful in the market. Even if you had more data than anyone else, it's still impossible to predict the future with 100% accuracy. In situations that rely on accurate forecasts of the future, Buffett advises not to invest. If it's complex for you, just look for other businesses to invest in. Now, when I'm teaching traders, one of my mantras is to keep things simple. And I think this is what Buffett is saying here. All too often I find investors and traders in markets or positions that they do not understand, and this causes emotional decision making and poor returns. I also have to agree with Buffett that if no companies on your list fit your investment criteria, stay in cash because cash really is a position. Number 6, buying a stock of a company is buying part of a business. Imagine you're buying an ownership stake in a convenience store around the corner from your house. Now, automatically, you will think about the competition, suppliers, prices, etc. You'll have to think about both the specific location as well as its competitive position in the marketplace. Similarly, when buying stocks, you need to think about all of these things, just as the people running the business do. When you buy a stock, you are not just buying a piece of paper or a ticker symbol. You are buying the stock of a company and it's buying ownership stake in that business. I think many people forget about this and often they do not think of stocks they own as assets in the same way they think of real estate. They often treat the market and the buying and selling of stocks more like a place to gamble. We saw this in the tech and other booms where the masses invested in things that had little or no intrinsic value or profits. Number 7 is managing your risk. Now this is my favourite area to talk about with traders, as I find the majority, whilst they intellectually give the impression that they know, they really do not understand it. Buffett's rule number 1 is never lose money. His rule number 2, never forget rule number 1. Buffett's other famous quote, risk comes from not knowing what you're doing. Here, I would suggest 90% of traders and a large percentage of investors do not heed this sage advice. Buffett suggests that when a company no longer matches your reasons for buying, sell the stock. If you determine it needs to be above its 2-year average stock price and falls beneath it, then you should sell. This is what most Buffett followers miss. He has rules and he diligently follows them. When a company no longer fits his criteria, he sells. Resist the urge to make excuses to stay in the investment. Sell it, period. Here I totally agree with him. I teach traders to position trade, and this means buy low as Buffett teaches us, and then to hold the position until risk of holding that position becomes too high. Again, whilst we might go at the exercise a different way, both Buffett and I agree on the buy low and sell high principle. Number 8 is learn from your mistakes and move on. Now you might be astonished to know that even Warren Buffett makes mistakes, and big ones too, but he makes sure that he learns from his mistakes. Buffett also advises keeping a record of the mistakes you have made so that you know what went wrong and make sure you do not repeat them again. Documenting your mistakes is a way of you taking responsibility for them, as all too often we sweep mistakes under the carpet in an attempt to hide it as if it never occurred, and this then breeds a false reality. Being disciplined and accountable are both traits of excellent traders. Buffett further says that you should share these lessons with your children and grandchildren so that they know what mistakes not to commit. Now, I really thank him for not only sharing his lessons with his family, but with the world. What I think is sad is that whilst his words of wisdom are excellent and highly valuable, the majority either do not listen or do the opposite, and this is a tragedy. Now, I do hope you've enjoyed this series on Buffett's words of wisdom. Now, whether your desire is to be a good investor or trader, you would be wise to follow his wisdom. All right, let's look at the chart. We've got a chart of the Dow Jones index on here. It's a weekly bar chart of the Dow Jones. It just still has all the work in it that I showed in my last week's report. One thing that I get asked by a lot of people is, they say, oh, can you teach me to trade this market or that market? Can you teach me options? Can you teach me futures or foreign exchange trading? Can you teach me how to trade the American market or the Australian market? And I get that a lot. And to me, you become a trader. And once you're a trader, you can trade any market in the world. So even though I've got this Aussie accent, doesn't mean that what I'm talking about on the market and how to trade anything in the US, whether it's a stock or an index or a commodity, it's the same. How you go about your trading worldwide is exactly the same. And often too many people make judgments on things that really do take them away from being profitable. And looking at the Dow Jones, and I have been chatting about it, thinking it's going to be a bit more bearish. It does need to come down a little bit. I mean, we've been right with the Australian market over the past month or so in terms of my taking of that one. If you're looking at the Dow Jones chart, what you're seeing here, I'm on a weekly chart at the moment. As I was saying to you in past reports, I thought it would go past this 25% level of 23,805, and it had good probability of getting down to that 38.2% level. It did gap down last week to open at 24,606. And it fought back, or the bulls fought back later in the week to close it at 24,635. Good sign, but it was a downward move. But it's slowly making this interesting little pattern. And one thing that I know for certain is, I just lost that. I was just putting a couple of lines on here. What I know for certain is the best traders in the world use price, pattern, and time in their trading. Most traders use price alone, and what I find with traders, and I talk to traders all the time, and 99.9% of people that tell me they're traders use price alone pretty much, and they use maybe some support and resistance, maybe a tiny bit of volume, but really all that's price analysis. They don't really use time, and they don't use a lot of pattern analysis. And if you're trading against somebody who knows price, pattern, and time, and you're only using price, then you're going to get your money taken every single time. And that's why so many traders lose on the marketplace. The statistics are that 80% of traders don't make money, 10% break even, and only 10% of us actually make money consistently. So it's about educating yourself and making sure that you understand what you need to do. Now, what I'm seeing on the Dow Jones, this looks a bit more like a bearish pattern to me. So I still think it's got more further to go. Now, I'm not suggesting it will get to that 38.2% level at 22,320, but it's probably going to keep going down. If it does break below that green line that I've got there, then it will go down to that point. But right now, let's wait and see. I've got a few more stocks from Buffett stocks. I'm going to go through a few of them. I've got another 4 at the moment that he owns, or Berkshire Hathaway owns. One of them's IBM. Great stock, have been trading for a long time. Right now I'm looking at this and I'm saying this stock looks a bit bearish to me. I think it's got further downside. If I bring up this weekly chart and we have a good look at that, you can see how it has its most recent high in February 2017. So it's been going down for over 12 months. Interestingly, it's holding up here around this sort of $138 level. I would suggest if it gets below that, let me put a horizontal line here and go across that. If I would expect if it dropped below that level, then it's heading south and it'll probably get down right down to this low down at 116.9 points. I'm being really high level in my analysis here, and I'm using a bit of price based stuff here. I'm just trying to keep everything nice and high level rather than going to too many technical aspects of it, because as I get too technical, people then start to get confused. Apple, one of the best companies in the world, as you all know, and right now that's bullish. It is super bullish and it's likely to keep going. I could get into a lot of technical analysis on this and working out where it's likely to run. But right now, if you're in this stock, I'd be staying with it. It's a really good choice by Mr. Buffett for Berkshire Hathaway to own, and I don't see any reason why you wouldn't stay in this stock. Next stock we're looking at is Coca-Cola. Again, another one of these great stocks the world knows and loves. And looking at this chart, it has been a little bit more bearish since this high back in January of this year. It has fallen away. Currently, it's fallen away down to about 41.45. But if you look at this week, if we go over to the weekly bar chart, you can see this last week ending the 1st of June. It's looking a lot more bullish. So if I just expand that up, but 1 week does not make a sheep station, as we talk about here in Australia. It doesn't make you a millionaire. So 1 week up's not enough to impress me yet. This could just be a counter trend move in a further downward trend. At this point in time, it needs to really stay up above this. I'd like to see a higher trough above that 41.45. If it moves up for a few weeks, come back and makes a higher trough, then I'd start getting a little bit more excited. But right now, it's a little bit bearish, but I still do understand why Berkshire Hathaway own this stock. It is a great stock, long-term great stock. Here's the last one I want to bring up. It's called American Airlines. I'm sure you all know this, a little bit more volatile. I don't have a lot of data on this for some reason. I've only got it back to 2013. Not a lot of data on it. Looks quite volatile. At this point in time, Mr. Buffett must have some more information than me. I generally don't buy airlines. I don't really like to buy airlines because they're so fickle, and changes in the oil prices, little things can happen to make those stocks being a lot more volatile. Airlines tend to be a lot more volatile in their price movements. As you can see, the recent high was January this year. It's fallen quite considerably since then. It's been a nice big fall on it. At this point in time, it is struggling to move up. I would suggest if it can't move up past around about this sort of level up around here, around that $46, $47, $48 mark there, I'd still think it's possibly maybe going lower, but it's looking okay. It's not super bearish at this point in time. If I use my nice little tool here, my price tool, and whack it on here, you can see here how it's gone down to that 50% level. If it breaks through that $41.96, then it will head down to that $37.92. At this point in time, it's holding up, but do watch this. I wouldn't be putting it on my watch list to buy right now. I'd be seeing what direction it takes. So that's it for the charts for this week. Good luck, good trading. I'll talk to you next week. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.